Imagine that stomach-dropping moment, right? You've just hit send on something really important, maybe work stuff, maybe even taxes, and then you see it. The mistake.
Oh, yeah, that feeling.
Yeah, that quick spike of panic, and then you're thinking, can this even be fixed? Well, today we're diving deep into exactly that kind of scenario,
Hmm.
but specifically for employment tax errors.
Hmm.
We're talking about a form lots of employers might see, but really hope they never have to actually use, Form 941X.
Right. The X marks the spot for corrections.
Exactly. Think of it like a crucial do-over button for your payroll taxes.
Yeah.
And honestly, knowing how to press it correctly, that can be a real game changer for your business's financial health.
It really can. And what's truly interesting here, I think, is that while it's obviously about correcting past errors, getting your head around Form 941X isn't just about fixing what went wrong.
Okay.
It's also about, safeguarding your financial standing, making sure you're compliant with all the IRS rules. And yeah, sometimes it's even about getting money back that you accidentally overpaid.
Getting money back is always good.
Always. So for any employer, it's critical to understand not just what this form is, but really why it matters, and maybe most importantly, how to navigate all its complexities to be accurate and potentially save some money.
So our mission today is pretty clear. We want to equip you, our listener, with a really solid understanding of Form 941X. We'll unpack its exact purpose, those critical deadlines you absolutely need to know, the different ways you can make corrections, adjustment versus claim. We'll get into that.
Big difference there.
Right. And how to properly report adjustments for wages, taxes, credits, all that stuff. And importantly, all of this is coming straight from the latest IRS instructions. We're cutting through the jargon.
Plain to, anyway.
Yeah, trying to give you a clear path. So think of this as your shortcut to confidently handling those employment tax corrections and maybe, just maybe, finding some overpaid taxes to recover. Okay, so let's start right at the beginning. What exactly is this Form 941X designed for? And maybe just as importantly, what isn't it for? Because, with IRS forms, specifics are everything.
You're absolutely right. Specificity is key. So at its core, Form 941X is specifically designed to correct errors on a previously filed Form 941.
Okay, the quarterly one.
Exactly, the employer's quarterly federal tax return. It's the official way to fix those particular employment tax mistakes. Now, that means it's not for your original filings.
Right, so if you just forgot to file.
Yeah, if you simply didn't file Form 941 at all for a quarter, your first step isn't 941X. It's filing the actual original Form 941 for that period.
Makes sense.
And it's also really important to understand that Form 941X is not for other federal tax forms. Things like Form CT1 for railroads, or 943 for agricultural employers, or 944 for smaller employers who file annually, or even Form 945 for withheld income tax.
They all have their own X form.
Exactly. Each one has its own corresponding X form. So Form CT1X, 943X, 944X, you get the idea. This one, 941X, is only for correcting Form 941.
Okay, so it's laser focused on the 941.
Yeah.
It's also not for every single kind of error on a 941, is that right?
Precisely. Good point. You wouldn't use it if your errors relate only to, say, the number of employees who received wages. That's line 1 on the Form 941.
Just the head count.
Right, just the head count. Nor would you use it for errors related only to the federal tax liabilities reported way down in Part 2 of Form 941, which details your tax liability day by day, or on Schedule B, which is what semi-weekly depositors use to report their daily liabilities.
So if those numbers are off, but the total tax isn't.
Exactly. If those kinds of errors don't actually impact the tax amount you owe, they're typically handled differently. Sometimes you might adjust your deposit schedule going forward, or maybe file a corrected Schedule B if it affects your overall liability calculation without changing the underlying wages or taxes.
Wow, okay.
The real key insight here is that Form 941X is specifically for making significant adjustments to the reported tax amounts or the credits you claimed, basically where your actual bottom line tax liability is changing.
That distinction is incredibly important. Thanks for clarifying that.
Yeah.
And hey, on a more modern note, it's pretty convenient they've finally, caught up with the times a bit, isn't it? E-filing.
It truly is. That's a relatively new and very welcome convenience. Form 941X can now be filed electronically using the modernized e-file system, or MEF. Yeah.
Right.
So instead of stuffing envelopes and mailing paper, businesses can submit these forms digitally. It often speeds up processing times, definitely reduces common errors from just typing things in wrong.
Oh, I bet.
And you get a nice electronic confirmation that it was filed. For a lot of businesses, this digital option really helps streamline what can be a pretty intricate process.
Definitely sounds like an improvement.
Yeah.
Okay, let's talk about the dreaded clock. When you find an error, there's always that feeling of, oh no, how long do I have? What's the critical deadline here? What the IRS calls the period of limitations.
Right, the period of limitations. It's basically the legal window, the time frame within which you're allowed to make corrections to a return you already filed.
Hmm.
And it determines whether you can claim a refund or if you have to pay additional tax.
And if you miss it,
If you miss it, you generally lose the ability to make that correction permanently. So it's critical. The general rule is basically this.
okay.
If you overreported taxes, meaning you paid too much and you're looking for a refund or a credit, you generally need to file Form 941X within 3 years of the date the original Form 941 was filed, or 2 years from the date you actually paid the tax, whichever of those two dates is later.
So the later date gives you potentially more time if you paid late.
Exactly. It offers a bit more flexibility if you overpaid. Now, if you underreported taxes, meaning you owe more money, you generally have a stricter window. It's usually 3 years from the date the original Form 941 was filed.
Okay, so a bit more leeway if you're trying to get money back, but a tighter 3-year window if the IRS is expecting money from you. Makes sense.
Mm.
And how does the IRS figure out that official filing date for these deadlines? Does the day I actually put it in the mail count?
Not always, and this is a key point. For these limitation purposes, if you file your Form 941 for a calendar year before April 15th of the succeeding year.
So, like filing your Q4 return in January.
Right. If you file early, the IRS treats it as if it were filed on April 15th of that succeeding year anyway.
Interesting. So the clock doesn't start ticking early just because you were efficient.
Pretty much. The clock effectively starts on that April 15th date for limitation purposes, no matter when you actually mailed it before then. Let's use an example from the IRS instructions. It helps clarify.
Okay, yeah, let's do that.
Imagine you filed your 2023 fourth quarter Form 941 on January 25th, 2024. You were prompt, paid everything on time. For the IRS, that return is officially considered filed on April 15th, 2024. Now, fast forward. Let's say on January 29th, 2027, you discover you overreported Social Security and Medicare wages on that specific 2023 Q4 form by, say, $350.
Yeah.
To correct that error and claim your refund, you must file Form 941X by April 15th, 2027. That's the absolute end of the 3-year period of limitations for that Form 941. And importantly, because you found the error so close to the deadline in this example, you'd have to use the claim process to get that refund, not the adjustment process. We'll get into that difference more later.
Okay, so that April 15th date is really the anchor point.
Yeah.
Now, this next point you mentioned about expired lines, it feels like a bit of a sobering reminder for anyone looking back at older periods, especially around the COVID era stuff, right?
It really is.
While many of those specific COVID era corrections might feel like they're in the rearview mirror, understanding why certain lines on the current Form 941X are now just marked reserved really highlights the absolute importance of acting within these time limits. It's not just a suggestion from the IRS, it's a hard deadline. Once it passes, you're often just out of luck. Can you walk us through some of those now reserved lines and what they were for?
Absolutely. It's a good illustration of how these limitations work in practice. As of 2025, you'll see quite a few lines on Form 941X designated as reserved for future use. This is primarily because the period of limitations for the corrections those lines were used for has generally expired for most employers.
Right.
For instance, you'll see lines like 18A, 26A, 30, 31A, 31B, and 32 are among these reserved lines now.
What were they for, like 18A and 30?
Right, so lines 18A, 26A, 30, and 31A, those were specifically used for correcting things related to the Employee Retention Credit, the ERC, things like the qualified wages paid for the ERC and the qualified health plan expenses that were allocated to those wages.
The ERC. Huge deal during the pandemic.
Massive, a real lifeline for many businesses. But its window for correction is largely closed now. For ERC claims related to wages paid in the second, third, and fourth quarters of 2020, that period of limitations generally expired back on April 15th, 2024.
Already passed. Wow.
Yep. And for wages paid in any of the 4 quarters of 2021 for the ERC, that period generally expired on April 15th, 2025. Line 31B that was tied to recovery startup businesses for Q3 and Q4 of 2021, and its period has also largely expired.
So if an employer listening now realizes they might have had a legitimate ERC correction from back then, but they missed those dates, they're likely out of time now.
For the most part, yes. Unfortunately, that's the reality of these deadlines. It really underscores the need for proactive payroll management and review. It's not just about compliance day-to-day. It's about ensuring you don't miss out on financial benefits you are actually entitled to claim or correct.
Good point. What else expired?
Well, the same applies to the deferred employer Social Security tax. That was a feature back in 2020 for Q2, Q3, and Q4. Lines 24 and 33B were used for those corrections, and their period of limitations generally expired on April 15th, 2024.
Okay.
Similarly, line 32 was for the Work Opportunity Tax Credit, but specifically for certain tax-exempt organizations hiring eligible unemployed veterans. For the 2020 quarters, that expired April 15th, 2024, and for the first quarter of 2021, it was April 15th, 2025.
Lots of April 15th dates there.
It's the standard anchor date.
Yeah.
And then lines 33A and 34, those were specifically for corrections to qualified wages paid way back between March 13th and March 31st, 2020, related to the ERC and the health plan expenses tied to those wages. Those also generally expired on April 15th, 2024.
Okay. What about the COVID-19 related sick and family leave wages? That was
Yeah.
another big one for a lot of businesses.
Yeah.
Are those completely in the past now for corrections?
Mostly yes, but there's an important little nuance here. The credit for qualified sick and family leave wages was generally limited to leave taken after March 31st, 2020 and before October 1st, 2021. The Lions used to claim that credit were actually removed from the main Form 941 for tax periods starting after December 31st, 2023. The reasoning was, it's pretty rare for employers to be paying wages now for leave taken so long ago.
Makes sense.
However, there is a specific scenario to be aware of. If an employer does happen to pay qualified sick and family leave wages after December 31st, 2023, but it's for an earlier applicable leave period, say for leave taken in 2021, but maybe it wasn't processed or paid out until 2024, they are still eligible to claim the credit for those specific wages.
Oh, okay. So the payment date matters in that specific case.
Exactly. In that very specific circumstance, you would file Form 941X to claim the credit, but you'd file it for the quarter in which you paid those wages. And crucially, you can only file that 941X after you filed the original Form 941 for that later quarter.
Why after?
Filing the 941X before the original 941 for that same quarter could cause processing errors or delays with the IRS system. So file the 941 first, then the 941X for the credit.
That's a really good distinction to remember, the payment date overriding the leave date in certain very specific situations. Okay, so to quickly summarize this first part, you need to understand what 941X is for, what it isn't, and pay super close attention to those critical periods of limitation. Any other general filing rules we should cover before moving on?
Yeah, just a couple more fundamental rules to keep in mind. First, you absolutely must file a separate Form 941X for each individual Form 941 you're correcting.
One correction form per original form.
Precisely. So if you found errors on both your Q3 2024 and your Q4 2024 Forms 941, you'd need to prepare and file two completely distinct 941X forms. That ensures clarity and proper processing for each separate period.
Okay.
And second, generally speaking, you should file Form 941X separately from your regular ongoing Form 941 filings. Don't staple them together or mail them in the same envelope.
Keep them separate.
Keep them separate. There's one very niche exception. If you didn't file Form 941 originally because you mistakenly treated workers as independent contractors and now you're reclassifying them as employees under certain procedures, then you might attach the 941X to the original 941 you're now filing. But that's a pretty unique case. For almost all other corrections, file 941X on its own.
Okay, so you've found an error, you've checked the clock, the period of limitations, looks like you're okay there, you're ready to fix it. Now what? You mentioned earlier there are two distinct paths on Form 941X, and choosing the right one sounds really crucial.
It absolutely is. It dictates how the IRS handles your correction and ultimately whether you get a credit applied to future taxes or a direct refund check.
Okay, what are the two paths called again?
They are the adjustment process and the claim process. Each serves a different purpose, and your choice really depends on whether you underreported or overreported your taxes and what you want the financial outcome to be.
Right, you compared it to store credit versus cashback earlier.
Exactly. Similar concept. Different mechanism, different result.
Okay, let's start with the adjustment process. When would an employer typically choose that path? What does checking line 1 mean?
Right. Checking line 1 is the adjustment process. You'll use this in two main situations. First, and maybe most commonly for corrections, is if you underreported your employment taxes, meaning you didn't pay enough and now you owe more money. This is you fixing a shortfall.
Okay, paying what you owe.
Exactly. The second scenario is if you over-reported taxes you paid too much, and you want to apply the resulting credit to a future Form 941 return rather than getting a direct refund check sent to you.
Ah, so you use the overpayment to lower your next tax bill.
Precisely. It's a strategic choice, especially helpful if you have ongoing payroll tax liabilities anyway. It just reduces your future payments.
Okay, so let's focus on that underreported scenario first. If I realize I owe more, what's the procedure using the adjustment process to avoid extra penalties?
This is really important for avoiding extra costs. If you've underreported, you must pay the additional amount you owe by the time you file the Form 941X.
Pay when you file the correction.
Yes. Paying when you file is crucial because doing so will generally ensure that your correction is interest-free, and you won't be subject to failure to pay penalties or failure to deposit penalties, provided you meet the timeliness rules.
Okay, and what are those timeliness rules? Is there a specific due date?
Yes, the due date for filing the 941X and paying the underreported tax amount is essentially the due date of the return for the quarter in which you discovered the error.
The quarter you found the mistake, not the quarter the mistake happened in.
Exactly, the discovery quarter. So, for example, if you discover an error sometime between July and September 2025, that's Q3, you would need to file Form 941X and pay the extra tax by October 31st, 2025, which is the normal due date for the Q3 Form 941.
Okay, now you mentioned this helps avoid penalties. Why the rush to pay? What's the benefit?
Well, by filing and paying on time for those underreported amounts, meaning by the due date for the quarter you found the error, you effectively make the correction as if the error never happened from a penalty and interest perspective.
Ah, like wiping the slate clean penalty-wise.
Pretty much. It's a key strategy to mitigate significant financial hits like interest charges and those failure to pay or failure to deposit penalties. It turns a potential growing liability into just a simple correction and payment.
But what if you file the 941X late? Say you find the error in Q3, but don't file the correction until Q1 of the next year.
Okay, good question. If you file Form 941X late when correcting an underreported amount, meaning after the due date for the quarter you discovered the error, you must attach an amended Schedule B, Form 941, to that Form 941X.
Why Schedule B?
Schedule B is where semi-weekly depositors list their daily tax liabilities. By filing an amended one showing the correct liabilities for the original quarter, you avoid the IRS potentially assessing what's called an averaged FTD penalty, which can be quite significant. If you don't attach that amended Schedule B when filing late, they might just spread the underpayment across the quarter and hit you with a penalty.
Ouch. Okay, so attaching the amended Schedule B is crucial if you're filing late with an underpayment.
Absolutely. And the total liability for the quarter line on that amended Schedule B must then match your corrected total tax liability for that original quarter.
Got it. So prompt action really saves money and headaches down the line.
Oh.
Okay, what about the other scenario for the adjustment process when you over-reported taxes? How does that credit work if you check line 1?
Right. So if you overreported and you choose the adjustment process, check line 1, any negative amount which signifies a credit you're due shown on line 27 of your Form 941X will be automatically applied by the IRS as a tax deposit to your next regular Form 941 or Form 944 if you file annually.
Okay, so it reduces what you owe next quarter.
Exactly. It gets applied to the period in which you filed the Form 941X. So if you file the 941X in Q4, the credit applies against your Q4 liability. This effectively reduces your future tax payments for that quarter, which immediately helps your cash flow.
That sounds pretty efficient. Is there any advice on when to file it to make sure the credit applies smoothly?
Yes, the IRS actually encourages you to file Form 941X for these over-reported amounts if you're using the adjustment process sometime in the first 2 months of a quarter.
Why the first 2 months?
It just gives their system enough time to process the credit before you file your regular Form 941 for that same quarter. This helps you avoid potentially getting an erroneous balance due notice from the IRS, which can happen if you file your 941 showing the reduced payment, but the 941X credit hasn't fully processed yet. It causes unnecessary confusion and follow-up.
Ah, that's a clever practical tip. File early in the quarter to let the systems catch up. Can you give us a quick example of that timing?
Sure. Let's say on September 15th, 2025, you discover you overreported tax on your 2024 fourth quarter Form 941. You decide you want to use the adjustment process because you know you'll have payroll taxes due in the upcoming Q4 of 2025. To allow the IRS enough processing time, you'd ideally file that Form 941X relatively early in Q4, say on October 6, 2025. That's well within the first 2 months. By doing that, you can then confidently take that credit on your fourth quarter 2025 Form 941 when you file it in January, reducing your tax deposits accordingly during Q4.
Okay, that makes perfect sense. Plan ahead with the filing. That covers the adjustment process, which seems like the go-to for many ongoing businesses. Now, what about the other path, the claim process? When do you use that? By checking line 2, and what are the key differences?
Right, the claim process checking line 2. You use this path only if you overreported taxes, and you are specifically requesting either a direct refund, meaning you want a check back from the IRS, or an abatement of the overreported amount.
What's an abatement again?
Abatement just means the IRS removes a previously assessed but still unpaid tax amount from your account. So if they said you owed something but you prove you overreported, they abate it and make it go away.
Got it. Refund or abatement? Are there restrictions on using the claim process?
Yes, a very important one. Do not check the claim box, line 2, if you are correcting any underreported tax amounts on the same form, 941X.
Wait, so if I find I overpaid Social Security but underpaid Medicare for the same quarter, I can't use one form?
Correct. If you find yourself in that situation, correcting both underreported and overreported amounts for the same tax period, you absolutely must file 2 separate forms. You'd file one Form 941X, correcting only the underreported tax amounts, using the adjustment process, line 1, and paying what you owe. Then you file a completely separate Form 941X, correcting only the overreported tax amounts, using the claim process, line 2, to request your refund or abatement.
Wow. Okay. 2 separate forms for mixed corrections in the same period. That's critical to know to avoid rejection or delays, I imagine.
Absolutely critical. It prevents confusion and ensures each type of correction, the payment and the claim, is handled correctly by the IRS systems.
Are there any other crucial deadlines or restrictions specifically tied to the claim process itself?
Yes, a couple more. You can generally file a claim anytime before that main period of limitations expires, usually the 3 years from filing or 2 years from payment, whichever is later. However, there's a significant caution flag here. You must use the claim process if you file your Form 941X to correct overreported taxes within the last 90 days of that period of limitations window.
The last 90 days.
Yeah.
Have to file a claim then.
Yes. In that tight final 90-day window before the deadline expires, you cannot use the adjustment process to apply it as a credit to a future return. Your only option is to file a claim for a refund or abatement.
Okay, that's a hard rule for last-minute filings. Any other restrictions?
One more key restriction. You generally cannot file a refund claim using Form 941X to correct federal income tax or additional Medicare tax that was actually withheld from your employees' paychecks.
Why not? If I withheld too much?
Because if you actually withheld it, that money is considered the employee's. It's reflected on their Form W-2, and they will claim that withholding or overwithholding when they file their personal income tax return, Form 1040.
So the employee gets that money back from the IRS, not the employer.
Exactly. Your error of overwithholding federal income tax or additional Medicare tax is really between you and the employee. You might need to reimburse them directly if it's within the same year following specific rules, but you, the employer, can't typically get a refund from the IRS for it via Form 941X once it's been properly withheld and reported on a W-2 for a prior year. The employee claims it.
Okay, that makes sense. It's their money at that point.
So yeah, this whole distinction between adjustment line 1 and claim line 2 is truly critical. It determines if you're seeking a credit against future tax bills, which helps your immediate cash flow, or a direct refund check, which puts money back in your bank account eventually. And the timing, especially hitting that 90-day window, dictates which options are even available to you. Like we said, store credit versus cash refund, different processes, different outcomes, and you need to pick the right one based on your situation and the IRS rules.
Okay, so you've figured out your path adjustment or claim. Now it's time to actually tackle the form itself. Are there any general guidelines for just, filling out Form 941X that can help make sure it gets processed smoothly and doesn't get stuck in limbo somewhere?
Absolutely. The IRS does provide some clear instructions designed to help with accurate and timely processing. Little things can make a difference.
Like what?
Well, first, always try to type or print your entries really clearly. If you can type it or use a computer, the IRS actually prefers Courier font if you have it. Seems specific, but it helps their scanners.
Very fine.
Second, when you're entering dollar amounts, omit the dollar signs, just the numbers, but you can and should use commas and decimal points. And this is important. Always show an amount for cents, even if it's 0. So write 1,000.0, not just 1,000. Don't round entries to whole dollars.
Be precise with the cents. Got it. What about negative numbers?
For negative amounts, which you'll use a lot for decreases or credits, use a minus sign. right before the number. Don't use parentheses like you might in accounting sometimes. The IRS system reads the minus sign.
Minus sign, not parentheses. Okay.
Also, make sure you complete all 5 pages of the form. It's a long one. And crucially, you absolutely must sign it on page 5. If you forget to sign it, processing will be significantly delayed. They'll likely send it back to you.
Don't forget to sign page 5. Check.
Also, provide your employer identification number, EIN, your business name, and your address clearly on page 1. And it's a good idea to put your EIN and name on the top of the subsequent pages too, just in case they get separated, and definitely on any attachments.
Good practice.
And one more thing, don't forget to enter the date you discovered the errors. If you found multiple errors on different dates, use the earliest date you discovered any of them. That discovery date is really critical for the IRS as it impacts how they calculate potential interest and penalties and confirms you're within the period of limitations.
Earliest discovery date. Got it. Precision and completeness seem to be the watchwords here. Now, part 2 of the form. It focuses on certifications, and it looks like it has a lot to do with your employees, right? Can you explain what the employer's duty is here, especially when you're trying to recover taxes you overpaid?
Yes, part 2 is all about your certifications, and it really highlights your responsibility towards your employees, particularly when you've overreported taxes and you're trying to get that money back.
Okay.
First off, line 3 is basically mandatory. You must check this box. By checking it, you're certifying that you filed, or that you will file, all the required forms W-2 and, if necessary, forms W-2C, which are corrected W-2s, with the Social Security Administration, SSA.
Even if the correction on the 941X doesn't actually change anything on the W-2s?
Yes. Even then, you check line 3 regardless. It's your confirmation to the IRS that the existing W-2s are correct as they stand, or that you will issue corrected W-2Cs if the error you're fixing does impact an employee's reported wages or tax withholding amounts. It ensures consistency across all the forms.
Okay, so check line 3, always. Then we get to lines 4 and 5, which seem more specific about over-reporting and employee rights.
Exactly. Lines 4 and 5 come into play specifically if you over-reported federal income tax, Social Security tax, Medicare tax, or the additional Medicare tax. If you did, you have a legal duty to protect your employees' rights to recover their share of those overpaid taxes.
Because you withheld it from their pay, so it's partly their money you overpaid.
Precisely. Even though you, the employer, remitted the taxes, a portion came from their wages. So the IRS wants to make sure the employees are made whole and don't lose out. These certifications are how you tell the IRS you've handled that correctly.
Okay, can you break down those lines? They look a bit dense. Line 4A first.
Sure. Let's break them down, because they are nuanced and really crucial for doing this ethically and correctly. Line 4A is specifically for situations where you overreported federal income tax or additional Medicare tax. You check this box if you have already repaid or reimbursed the employee's share of these taxes for the current or prior year, and you have obtained written statements from those employees confirming that they haven't claimed and won't claim a separate refund or credit from the IRS for that same overpayment.
Get a statement from the employee.
Yes, but there's a key limitation here for federal income tax and additional Medicare tax withheld. This repayment reimbursement certification route is generally applicable for the current calendar year only. For prior years, you usually can't get this back from the IRS via 941X because, as we discussed, the employee would have already claimed that withholding on their 1040.
Okay. Current year only for that method on line 4A. What about line 5A? Looks similar, but for different taxes.
Right. Line 5A is similar, but it's specifically for the employee share of Social Security and Medicare taxes, the FICA taxes. You check this box if you have repaid or reimbursed your employees their shares of these FICA taxes. And if it's for prior year's refunds, you must also have received those written statements from them saying they won't double dip by claiming a refund from the IRS too.
Okay, so you need the statements for prior year FICA corrections too. Do you send those statements to the IRS?
No, good question. You keep these statements securely in your own records. You don't send them with the Form 9401X unless the IRS specifically asks for them later, maybe during an audit. They're your proof you did it right.
Got it. Keep the proof. What's line 5B then? It mentions employee consent.
Yes, line 5B is a different scenario for overreported employee Social Security and Medicare taxes. This is for when you haven't yet repaid or reimbursed the employees. You check this box if, instead, you have received explicit written consent from each affected employee, allowing you to file the claim on their behalf for their share of those overpaid FICA taxes.
So you're acting as their agent to get their share back.
Essentially, yes. And that consent has to be pretty formal. The IRS requires it to include specific details: the employee's name, Social Security number, your business info, name, address, EIN, the tax period involved, the type of tax, SOCSEC Medicare, the amount of their share of the overpayment, a clear statement authorizing you to file the claim for them, a statement that the employee hasn't already claimed and won't claim a refund for that amount themselves, very important for prior years, the reason or basis for the claim, and it needs to be signed and dated by the employee under penalties of perjury.
Wow, that's a detailed consent form. And again, you just keep those.
Exactly. Keep them safely in your files as proof that you have the proper authorization to claim the employee portion of the refund.
Okay, what if you can't get consent or can't find the employee? Line
Yeah.
5C.
Right. Line 5C covers the situation where the over-reported tax you're claiming relates only to the employer's share of Social Security and Medicare taxes. You check this if, for example, you made reasonable attempts to contact former employees but couldn't find them, or perhaps they just didn't provide consent for you to claim their share. In this case, you're only recovering the portion you, the employer, overpaid. You're not touching the employee share.
Makes sense. And finally, line 5B, tax not withheld.
Line 5B is checked if the over-reported amount you're correcting is for taxes that you didn't actually withhold from employees in the first place. Maybe it was purely an administrative error in your recording or calculation that didn't affect employee pay. Since it wasn't withheld from their pay, it wasn't really the employee's money to begin with, so their consent or reimbursement isn't relevant.
Okay, so this whole section, part 2, really drives home the responsibility employers have, doesn't it? It's not just about grabbing your money back.
Not at all. It underscores that significant responsibility. You have to make sure your employees' tax records are accurate, and their rights to any funds they overpaid through withholding are fully protected. These certifications are essentially your promise, your attestation to the IRS, that you've handled the employee side of the correction properly and diligently. Getting this part right can definitely help prevent future audits or disputes related to those employees' tax situations.
Okay, we've navigated the why, the when, the adjustment versus claim choice, and those crucial certifications about employee rights. Now for the real part of the form, part 3.
Yeah.
This is where you actually put in the numbers, the specific corrections. This looks like where the real detailed work happens.
It absolutely is. Part 3 is where the rubber meets the road, line by line. Precision here is paramount.
Can you just walk us through the general logic first? There are those 4 columns for each line item. How do they work together?
Right. Understanding how these 4 columns interact is key to filling out Part 3 correctly. For pretty much every line item you might need to correct, you'll see these 4 columns. Column 1 is where you enter the corrected amount. This is what the figure should have been originally, based on your audit or review. It's your target, accurate number. Column 2 is for the amount originally reported on your Form 941. Or, if you've already filed a 941X for this period before, it's the amount as it was previously corrected. This is your starting point, what the IRS currently thinks the number is. Column 3 shows the difference. You calculate this simply by subtracting column 2 from column 1. Column 1 minus column 2. Now, if the result is a reduction, meaning you originally reported too much, you must use a minus sign here to clearly indicate that decrease. Column 4 is the actual tax correction. This is the bottom line impact on your tax liability. Often it's calculated by taking the difference from column 3 and multiplying it by the relevant tax rate. Or sometimes, especially with credits, it might be a direct copy of column 3, but maybe with the sign reversed. The whole point of column 4 is to show the actual dollar change, either an increase in tax you owe or a decrease, a credit.
Okay, so should be col 1 minus was col 2 equals difference col 3, which leads to tax impact col 4. That seems logical. Let's try to break down some of the most common or maybe trickier lines people might need to correct, starting right at the top with wages. Line 6.
Sounds good. Let's start with line 6. Wages, tips, and other compensation. This is foundational as it impacts so many other calculations.
Yes.
So if you need to correct this total for an increase, let's say you originally reported $9,000 in wages on Form 941, but then you discovered $1,000 in tips that were reported to you but you forgot to include. Your corrected amount in column 1 would be $10,000. Column 2 would show the original $9,000. The difference in column 3 would be a positive $1,000. Column 4 would depend on which taxes apply to that $1,000. For a decrease, maybe you reported $9,000 but then realized, oops, I accidentally included a $2,000 payroll draw twice due to a processing glitch. Your corrected amount in column 1 would be $7,000. Column 2 is the original $9,000. The difference in column 3 would be negative $2,000, shown clearly with that minus sign.
Okay, simple add or subtract. What about other things that might affect line 6, like fringe benefits or allowances?
Good point. Another common scenario involves things like auto allowances. Say you paid an employee a $1,500 flat auto allowance during the quarter. Initially, maybe you didn't treat it as wages, thinking it was a reimbursement. But later, you realized it didn't meet the IRS's accountable plan rules. Maybe the employee didn't adequately substantiate their actual expenses or didn't return any excess allowance within a reasonable time.
So it becomes taxable income.
Exactly. In that case, it becomes taxable wages. You would then need to correct line 6 by adding that $1,500 to the corrected wages amount in column 1. This correction on line 6 is super important because that corrected wage amount flows through to update the employee's Form W-2. It impacts calculation of Social Security and Medicare taxes, possibly additional Medicare tax, and it affects your business expense deductions related to payroll. It's a key number.
Definitely sounds foundational. Okay, what about line 7, federal income tax withheld? You mentioned earlier this one can be tricky, and you can't always correct it.
Indeed. Line 7, federal income tax withheld from wages, tips, and other compensation. This is a big area of potential confusion. Generally, you can only correct administrative errors on this line.
What counts as an administrative error here?
An administrative error is where the amount you reported on your Form 941 was simply not the same as the amount you actually withheld from the employee's paychecks. Maybe a typo, a transposition error when filling out the 941. These kinds of administrative errors can be corrected on Form 941X, whether it's for the current year or prior years.
Okay, give me an example of that.
Sure. Let's say you have 3 employees. You look at your payroll records and confirm you accurately withheld a total of $9,000 in federal income tax from their paychecks during the quarter. But when you filled out Form 941 line 3, which feeds into line 7 on 941X, you accidentally type $6,000 instead of $9,000.
Just a typo.
Right. That's a classic administrative error. The amount actually withheld, $9,000, differs from the amount reported, $6,000. To correct this on Form 941X, line 7, you'd enter $9,000 in column 1, corrected, $6,000 in column 2, original, which gives you a $3,000 difference in column 3. And that $3,000 difference directly becomes a positive $3,000 tax correction in column 4, meaning you owe that additional $3,000 you underreported.
Okay, so that's correctable. But just to be absolutely clear, what if I just made a mistake in the calculation itself? Like I actually withheld the wrong amount from an employee because I used last year's tax tables or something. That's generally not correctable using 941X for prior years, right?
That's the crucial distinction. And yes, you've got it right. You generally cannot use Form 941X to correct those non-administrative errors for federal income tax withholding from prior years.
Why not? Again.
Because if you actually withheld that amount, even if it was the wrong amount based on the rules, that's the amount that gets reported on the employee's Form W-2. The employee then uses that W-2 to file their own Form 1040, and they claim a credit for exactly the amount you withheld.
Ah, so the IRS considers that withheld money to be the employee's responsibility to reconcile on their 1040?
Exactly. The IRS essentially says that money was withheld, it's on the W-2, the employee deals with it on their return. Similarly, you also cannot use Form 941X to reduce the federal income tax withheld you reported if an employee later repays wages from a prior year, like for an overpayment. Those wages were correctly reported as paid in the prior year, and the withholding done in that prior year was based on those wages, so it stands.
Wow. That distinction between administrative errors, reporting mistakes, and substantive errors, withholding mistakes for federal income tax is incredibly important. Okay, let's move down to the FICA taxes, Social Security, and Medicare. Line 8 is Social Security wages.
Right, line 8. Taxable Social Security wages. For this, remember the combined employer and employee tax rate is generally 12.4%. That's 6.2% for the employer's share and 6.2% for the employee's share.
Okay, 12.4% total.
Now, there's a small exception. If you're only correcting the employer's share, maybe because you couldn't get employee consent for their share, like we discussed for line 5C in part 2, then you'd use just the 6.2% rate for your tax calculation in column 4. But usually it's 12.4%.
Okay, so let's use that earlier example where wages decreased by $2,000 because they were double counted. How does that flow to line 8?
Okay, good example. If those $2,000 in wages were subject to Social Security tax, column 1 corrected would be $7,000 if the original was $9,000. Column 2 original would be $9,000. Column 3 difference would be negative $2,000. Column 4 tax correction would then be negative $248. That's calculated as negative $2,000 multiplied by 0.124, the 12.4% rate. This negative number in column 4 reduces your total tax liability.
Got it. Straightforward multiplication. Now, what about lines 9 and 10? Those relate back to the qualified sick and family leave wages from the COVID era, right?
Right.
I know the deadlines are mostly passed, but just for completeness, how would someone have corrected those if they needed to?
Right. Line 9. Qualified sick leave wages for leave pre-April 1st, 2021. And line 10. Qualified family leave wages for leave pre-April 1st, 2021. A key detail for these specific wages was that they were not subject to the employer's share of Social Security
Oh,
tax.
interesting. Only the employee share applied.
Correct. So the tax rate used for corrections on these lines is only 6.2%, just the employee's share. And yes, as we hammered home earlier, the period of limitations for these largely expired April 15th, 2024 for 2020 Q2, Q4, and April 15th, 2025 for 2021 Q1. But if you were correcting them, say an increase in qualified sick leave wages, if you originally reported $1,000 but found it should have been $2,000, the difference in column 3 is $1,000. The tax correction in column 4 would be $62, which is $1,000 multiplied by 0.0622.
Okay, 6.2% rate for those specific leave wages. And tips are handled separately from general wages for Social Security too, right? Line 11.
Yes, they get their own line. Line 11, taxable Social Security tips. The combined tax rate here is 12.4%, just like regular Social Security wages. So if we use that earlier example where you found $1,000 in overlooked tips, increasing the total from 9K to 10K, the difference is $1,000. The tax correction in column 4 for line 11 would be $124, $1,000 times 0.124.
Simple enough. Then we have Medicare wages and tips combined on line 12.
Correct. Line 12, taxable Medicare wages and tips. The combined rate for Medicare is 2.9%. That's 1.45% for the employer share and 1.45% for the employee share. Similar to Social Security, if you were only correcting the employer share for some reason, you'd use just 1.45%, but typically it's 2.9%.
So using that $2,000 wage decrease example again.
Right. If those $2,000 in double-counted wages were also subject to Medicare, column 1, $7,000, column 2, $9,000, column 3, -$2,000, column 3, column 4, tax correction would be -$58. That's calculated as -$2,000 multiplied by 0.029, the 2.9% rate, again, reducing your total tax.
Okay, now what about the additional Medicare tax, line 13? This applies to higher earners, and you hinted it has its own complexities, especially around what errors can actually be corrected.
It absolutely does. Line 13, taxable wages and tips subject to additional Medicare tax withholding. This is the extra 0.9% tax on earnings over certain thresholds. $200,000 for single filers, $250,000 for joint. The tax rate for corrections is 0.9%.
Okay, 0.9%. What are the complexities?
The main complexity mirrors the issue with federal income tax withholding. You can generally only correct errors related to additional Medicare tax if they are discovered in the same calendar year the wages were paid.
Same year only. What about prior years?
For errors involving additional Medicare tax in prior years, you can generally only correct administrative errors again, where the amount you reported on Form 941 differs from the amount you actually withheld, or if Special Section 3509 rates apply, which is usually about reclassifying workers.
So if it was a non-administrative error in a prior year, I just flat out failed to withhold the additional Medicare tax when I should have, I can't fix the tax amount on line 13.
Correct. If it was a non-administrative error in a prior year, you didn't withhold it, you can only correct the wages and tips subject to the tax in column 1. You cannot correct the tax reported itself in column 4 on your Form 941X.
Why? Same reason as income tax.
Exactly the same reason. The responsibility for paying that unwithheld additional Medicare tax from a prior year falls on the employee when they file their individual income tax return, Form 1040, potentially using Form 8959. The employer can't claim a refund or adjust the tax liability for failing to withhold it in a prior year via Form 941X.
Okay, that's a critical point for higher paid employees. It sounds like a detailed example might help cement this, especially the difference between administrative and non-administrative errors on line 13.
Yeah, let's quickly walk through that complex example from the IRS instructions. It really highlights the difference. The key takeaway isn't memorizing the exact numbers, but seeing how the type of error dictates the calculation in column 4. Let's say you have 2 employees, Xavier and Sophie, and you found errors in Q4 2024, discovering them in March 2025, so a prior year correction. For Xavier, his wages went over the $200,000 threshold in November 2024. His total wages, subject to additional Medicare tax, AMT, were $30,000. You correctly withheld the 0.9% tax, which is 217. $30,000 by 0.009. However, on your original Q4 2024 Form 941, you made a typo and only reported $3,000 in wages subject to AMT and $27 in tax withheld. This is an administrative error you withheld correctly but reported incorrectly. There's a $27,000 difference in wages, 30K should be 3K was, that needs correcting. Now for Sophie, her wages also went over $200,000 in December 2024. Her total wages subject to AMT were $20,000. You should have withheld 0.9% of that, which is $150. $180 to resign 0.009. But, oops, you failed to withhold anything, and you also didn't report $20,000 in wages subject to AMT on the original 941. This is a non-administrative error because you failed to withhold.
Okay, two different types of errors for the same tax type in the same prior quarter. How
Yeah.
do you fill out line 13?
Right. So on Form 941X, line 13, column 1, corrected wages subject to AMT, you'd enter the total corrected wages subject to AMT for both employees. $50,000, Xavier's $30,000, plus Sophie's $20,000. Column 2, original wages reported subject to AMT, you'd enter $3,000, which was just the incorrect amount reported for Xavier. Column 3, difference in wages. This comes out to $47,000, $50,000, $3,000. Column 4, tax correction. This is the crucial part. You only calculate the tax correction based on the portion related to the administrative error. That's Xavier's $27,000 difference in wages. So the tax correction is $27,000 multiplied by 0.009, which equals $243.
So Sophie's $20,000 in wages where you fail to withhold doesn't impact the tax correction number in column 4 at all.
Exactly. Because it was a prior year non-administrative error, failure to withhold, it only affects the wages subject to tax reported in columns 1, 2, and 3. It does not result in an additional tax liability for the employer in column 4 of Form 941X. That liability rests with Sophie on her 1040.
Wow. Okay, that example perfectly illustrates how incredibly precise you need to be about the type of error, especially for income tax and additional Medicare tax in prior years. It directly impacts the dollar amount of your correction. Okay, moving on down the form, what about tax adjustments on line 15? That sounds a bit like a catch-all.
Line 15, tax adjustments. It is a bit of a catch-all. This line is used for correcting prior adjustments reported on the original Form 941 related to things like fractions of cents discrepancies, adjustments for sick pay paid by a third-party insurer, certain adjustments for tips reported, and adjustments for the cost of group term life insurance coverage provided to former employees.
Okay. And that sick pay mentioned, just to be clear, that's regular third-party sick pay, not the special COVID-related qualified sick leave, right?
Correct. Good clarification. This line refers to ordinary sick pay adjustments, often involving third-party payers like insurance companies, not the qualified sick and family leave wages we discussed earlier, which had their own lines and credits.
Can you give an example for line 15?
Sure. Let's say a third-party insurer paid sick pay to your employees, and they notified you of the employer taxes related to that. On your original Form 941, you correctly claimed an adjustment reducing your taxes, shown as INXR $6,900, a negative number reducing tax. Later, the insurer sends a corrected statement showing the adjustment should have been INXR $9,600.
So you underreported the adjustment, claimed too small a credit.
Exactly. To correct this on line 15, column 1, corrected adjustment is INXR $9,600. Column 2, original adjustment is INXR $2,700. Column 3, difference is INXR $2,700, calculated as INXR $600 minus INXR $2,700. In this case, a negative difference represents a further reduction in your tax liability, so the negative number carries straight over to column 4 as a credit.
Okay, so a negative difference there means more credit. Got it. Now, beyond wages and standard taxes, Form 941X also has lines for correcting various credits, lines 16, 17, 18B, 18C, and then their refundable counterparts later on. How does the correctional logic work for credits? And can you quickly explain non-refundable versus refundable credits again?
Right. Correcting credits has its own slightly reverse logic sometimes, and understanding the refundability is key. We have lines like 16, qualified small business payroll tax credit for increasing research activities, 17, non-refundable portion of credit for qualified sick and family leave wages pre-April 2021, 18B, non-refundable portion of credit for qualified sick and family leave wages post-March 2021, 18-SIN, non-refundable portion of COBRA premium assistance credit, and then down lower the refundable portions of these credits on lines 25, 26B, and 26C.
Okay, non-refundable versus refundable.
Quick refresher. Non-refundable means that portion of the credit can reduce certain taxes you owe, usually the employer's share of Social Security tax, sometimes Medicare too, depending on the credit, but only down to zero. You don't get any excess back as a refund. It's limited by your liability. Refundable means any amount of the credit that's left over after wiping out those specific taxes can actually be refunded to you as cash or applied against other taxes. It can take your net liability below zero.
Got it. Limited versus potential cash back. How does this affect filling out the columns?
When correcting credits, the logic often feels reversed compared to taxes. If you're increasing the amount of credit you originally claimed, meaning you claimed too little, you'll typically enter a positive number in column 3, difference. However, this positive difference then translates into a negative number in column 4, tax correction.
Why negative?
Because An increase in a credit you're entitled to reduces your overall tax liability. So positive difference leads to negative tax correction. Conversely, if you're decreasing a credit, you claimed too much originally, you'll have a negative number in column 3, which then becomes a positive number in column 4, showing an increase in the tax you owe.
Okay, got to flip the sign for column 4 when dealing with credits. Anything specific about those credit lines?
A few points. For the research activities credit on line 16, if you're correcting it, you must also attach a corrected form 8974, which is the form used to calculate that specific credit. For the COVID-related credits, sick family leave on lines 17 and 18B, COBRA on line 18C, and their refundable parts on 25, 26B, 26C. Remember those specific periods of availability we discussed. For instance, the COBRA Premium Assistance Credit was only for premiums from April 1 to September 30, 2021. And crucially, for all these credits, especially the complex COVID ones, the IRS instructions strongly advise and sometimes require using the relevant worksheets, specifically Worksheet 1, 2, or 3 from the original Form 941 instructions for the year you're correcting. These worksheets are essential for figuring out the correct credit amounts, especially if you're claiming them for the first time via Form 941X or making complicated adjustments involving multiple factors like health plan expenses. Don't try to eyeball these credits. Use the worksheets.
Use the worksheets. Good advice. Now, what about reclassifying workers? Moving someone from, say, an independent contractor, 1099, to an employee, W-2. That seems like a big correction with potentially big tax implications. Are there special lines for that?
Yes, that's a significant event, and the IRS has specific lines for it. Lines 19 through 22 are designed for situations where you're reclassifying workers from non-employees to employees. This often happens after an IRS audit, or maybe through a voluntary classification settlement program, VCSP, or simply because you realize you made a mistake in classification.
Okay. How do you use those lines?
For these lines, the process is a bit different. You only enter the corrected wages for the workers you're reclassifying in column 1. Since they weren't reported as employees originally, you put zeros in column 2, original amount. Then, for the tax correction in column 4, you generally don't use the standard FICA rates. Instead, you often apply special reduced tax rates known as Section 3509 rates. The IRS provides these specific lower rates as a form of relief when employers voluntarily correct worker misclassifications or correct them under certain IRS programs. It acknowledges the unique situation. You'd need to carefully consult the IRS instructions or potentially Reverend Rule 2019-16 to determine the correct Section 3509 rates based on whether you also improperly failed to file required Forms 1099 for those workers.
Okay, special reduced rates potentially available for reclassification under Section 3509. That sounds like something you'd want expert advice on.
Definitely a situation where professional tax advice is highly recommended.
And quickly, what about lines 28, 29, and then 35 through 40? They look like they also relate back to the COVID sick and family leave credits.
Yes, they mostly tie into the additional components needed to calculate those credits accurately, covering both the earlier period, leave taken after March 31st, 2020, and before April 1st, 2021, and the later period, leave taken after March 31st, 2021, and before October 1st, 2021. Specifically, lines 28 and 29 are for correcting the qualified health plan expenses allocable to those sick and family leave wages for the earlier period. Lines 35 through 40 cover similar categories but for the later period. This includes correcting the qualified sick and family leave wages themselves, lines 35 and 36, their allocable qualified health plan expenses, lines 37 to 38, and any additional amounts under certain collectively bargained agreements related to these leaves, lines 39 and 40.
So more inputs for those credit calculations.
Exactly. And again, getting these lines right absolutely depends on using the detailed calculations from the relevant worksheets, worksheet 1 or 2, depending on the period, from the original Form 941 instructions. It really emphasizes how interconnected all these parts are and why those worksheets are indispensable for accurately figuring out the credit amounts when you're making corrections.
It really sounds like this whole section, Part 3, lines 6 through 40, is where you have to be incredibly methodical.
It truly is where the rubber meets the road. Each line, as we've seen, has its own specific rules, its own tax rates, nuances about what can and cannot be corrected, especially depending on the year and the type of error. I think the goal isn't necessarily to memorize every single detail right now, but more to understand the underlying logic. Know when you're subtracting, which tax rate applies to which type of wage or tax, the difference administrative versus non-administrative errors makes, and the absolute necessity of using those IRS worksheets for calculating credits. Understanding that logic is key to maximizing any potential refunds or minimizing any additional tax you might owe when you uncover an error, it's about getting the details right to save money.
Okay, so after meticulously working through all those individual lines and calculations in Part 3, it all finally funnels down to one grand total on line 27. What does that final number tell you? It's the bottom line.
Line 27 is indeed the grand total. This is the culmination of all your corrections. This single number tells you whether, after all adjustments, you have a credit coming back to you, or if you actually owe additional tax.
Okay, what if it's negative?
If line 27 shows a negative number, for example, negative 115.0, that's good news. It means you have a credit because the net result of your corrections is that you overreported your federal employment taxes. This is your chance to recover those funds.
And how do you get that credit? Does it depend on whether you chose adjustment or claim back on lines 1 and 2?
Exactly. It depends entirely on which box you checked back in Part 1. If you chose the adjustment process, checked line 1, this credit amount shown on line 27 will be applied by the IRS as a tax deposit against your next regular Form 941 or Form 944 liability. It gets applied to the tax period in which you filed the Form 941X. This is often the quickest way to see the financial benefit as it directly reduces your upcoming tax payment. If you chose the claim process, checked line 2, that negative amount on line 27 represents the refund you are requesting or the abatement you're asking for. The IRS will process this claim and, if approved, eventually send you a check or formally abate the tax.
Okay, is there a minimum amount for getting a refund?
Funny you ask. Yes, there's a tiny threshold. If your credit on line 27 is less than $1, the IRS policy is that they will only send you a refund or apply the credit if you specifically ask them to in writing. Otherwise, for such a small amount, they might just let it go.
Huh, good to know.
Huh.
Okay, what if line 27 is positive?
If line 27 shows a positive number, that means the net result of your corrections is that you owe additional tax. You must pay this amount by the time you file the Form 941X or by the due date for the quarter you discovered the error to avoid interest and penalties, as we discussed.
And can I use a credit from another correction to pay this? Like, if I filed two 941X forms at once, one showing I owe, one showing a credit.
No, unfortunately not. You cannot use a credit generated on one Form 941X to offset an amount due on a different Form 941X, even if you file them simultaneously. Each Form 941X stands on its own regarding payment or credit application. If line 27 is positive, you need to make a payment for that specific amount.
Or I pay separately for each form that shows an amount due. What about that Schedule B requirement again if I file late, no money?
Right, just to reiterate that, because it's important for avoiding penalties. If you owe tax, line 27 is positive, and you are filing Form 941X late, meaning after the due date for the Form 941 for the quarter in which you discovered the error, you absolutely must file an amended Schedule B, Form 941, along with your Form 941X. If you don't, the IRS might hit you with that averaged failure to deposit penalty. The total liability for the quarter shown on that amended Schedule B must match your corrected tax liability calculated on the Form 941X. Bottom line here. If you owe, pay on time if possible. If you can't pay on time, still file, make the payment as soon as you can, and make sure to include that amended Schedule B if filing late.
Okay, so you've painstakingly filled out all those numbers in Part 3. You've calculated the bottom line on line 27. You might think, phew, done. But there's another crucial step, right? Something that can really make or break how smoothly this correction gets processed. Part 4, line 43, the explanation. Why is this so important? It seems like just extra writing.
It might seem like extra writing, but Part 4, line 43. The power of explanation is absolutely not just busy work. It's your critical opportunity to communicate clearly and directly with the IRS reviewer who looks at your form. You need to tell the story behind the numbers. In fact, Treasury regulations don't just recommend it, they actually require you to provide a detailed explanation for each correction you're making on Form 941X.
Required. So what happens if you don't explain it well?
If you provide really generic explanations, things like just writing wages overstated or fixed payroll errors or taxes were not withheld, that's simply not enough detail.
Yeah, that sounds vague.
Exactly. And vague explanations will almost certainly delay the processing of your Form 941X. The IRS reviewer won't have enough information to understand why you made the correction, so they'll likely have to send you an inquiry letter asking for more details. That just stretches out the time until you get your refund approved or get your account properly settled. It creates unnecessary back and forth.
Okay, so avoiding delays means being specific. What should an employer include in that line 43 explanation to make sure it's clear, gets accepted, and minimizes that potential back and forth?
Your explanation on line 43 needs to be precise and comprehensive for each separate correction you've made. For each error you fixed, you should clearly state 1. The specific Form 941X line number or numbers that were affected by this particular correction. 2. The exact date you discovered this specific error. Again, important for limitations and potential penalties interest. 3. The dollar amount of the error itself, as shown in column 3 for that line. 4. And this is the most crucial part, the cause of the error. What actually went wrong? Why did the original number end up being incorrect? Was it a data entry mistake? Did you misunderstand a specific tax regulation? Did you overlook some information? Like those tips. Providing the context, the why, is absolutely vital for the IRS's understanding.
Okay, line number, discovery date, dollar difference, and the cause. Can you give that IRS example again of what a good explanation looks like?
Sure, the IRS provides this as an example of a strong, clear explanation. The $1,000 difference shown in column 3 on lines 6, 8, and 12 was discovered on May 12, 2025, during an internal payroll audit. We discovered that we included $1,000 in wages twice due to a system glitch during payroll processing. This correction removes the duplicate reported wages that were never actually paid.
Okay, that's super clear. It tells them what lines, when, how much, and exactly why system glitch causing duplication.
Exactly. That level of detail is precisely what the IRS is looking for. It demonstrates transparency, it shows you've investigated the issue, and it helps the IRS reviewer understand and process your correction much more efficiently. This definitely reduces the time it takes to get your refund or abatement processed. Think of it as building trust with the IRS through clarity.
That makes a lot of sense. Like writing a mini story for each number you change. Okay, what's the absolute final step then? You've done the numbers, written the explanations. How do you seal the deal and send this thing off?
The final, absolutely essential step is Part 5, signing your Form 941X. You cannot forget this. You must complete all 5 pages and physically or electronically, if e-filing, sign the form on page 5. An unsigned form is considered incomplete and will absolutely be delayed in processing. They'll likely just send it straight back to you.
Don't skip the signature on page 5. Who is allowed to sign it? Does it have to be the business owner?
The rules for who is authorized to sign vary a bit depending on your business structure. For a sole proprietorship, the individual owner must sign. For a corporation, including an LLC treated as a corporation, the president, vice president, treasurer, assistant treasurer, chief accounting officer, or any other corporate officer duly authorized to sign must sign. For a partnership, including an LLC treated as a partnership, or an unincorporated organization, a responsible and duly authorized member, partner, or officer having knowledge of its affairs must sign. For a trust or estate, the fiduciary must sign.
Okay, specific roles depending on the entity. Can someone else sign, like an accountant or payroll manager?
Yes, potentially. A duly authorized agent can also sign on the employer's behalf, but they must have a valid power of attorney, Form 2848, on file with the IRS, or the signature block must specifically indicate their authorization. For example, Jane Doe agent. It's also worth noting, for larger organizations perhaps, that corporate officers or authorized agents may be able to use alternative signature methods, things like a rubber stamp, a mechanical signing device, or even a computer software program signature. However, if you use these methods, there are specific documentation requirements you need to meet, outlined in an IRS document called Revenue Procedure 2005-39 to ensure the signature is considered valid.
Okay, alternatives exist but require careful setup. And what if you hire a paid tax preparer to fill out the Form 941X for you? Do they sign too?
Yes. If a paid preparer who is not an employee of your business prepares the form for a fee, they have their own separate section to complete at the bottom of page 5, the paid preparer use only section. They must manually sign the form in that section, and they also need to provide their preparer tax identification number, PTIN, and their firm's employer identification number, EIN. They're also legally required to give you, the taxpayer, a copy of the completed return for your records. That ensures you have a full paper trail of the correction filed on your behalf.
Good to know the preparer has responsibilities too. Okay, now circling back to payment. If line 27 showed you owe tax, how do you actually make that payment? Are there preferred methods?
If you owe tax, you have several convenient payment options, and the IRS definitely prefers electronic methods for speed, accuracy, and ease of tracking. You can pay electronically using the Electronic Federal Tax Payment System, EFDPS. This is a free service from the Treasury Department, highly recommended, very secure. You do need to enroll in advance, though. You can also use IRS Direct Pay, which allows payments directly from a bank account without prior enrollment for certain types of payments. You can pay by a credit or debit card online or by phone through third-party payment processors approved by the IRS. However, be aware that these processors will charge you a processing fee, which is usually a percentage of the payment amount, so that adds to your cost. And finally, you can still pay the old-fashioned way by check or money order. If you do this, make it payable to United States Treasury. Crucially, on the check or money order itself, be sure to write your EEN Form 941X, the calendar quarter you corrected, for example, quarter 2 or Q2, and the calendar year of that quarter, for example, 2024. Including all that info helps the IRS apply your payment quickly and accurately to the right account and tax period.
Excellent. Lots of options, but electronic seems best if possible. Okay, finally, after all that work, the calculations, the explanations, the signing, maybe making a payment, where exactly do you send this completed Form 941X if you're filing on paper? Does it go to the same place as the regular 941?
Not always, and the address depends on where your business is located. While electronic filing is strongly encouraged by the IRS, it's generally faster, more secure, and you get confirmation if you do need to mail a paper Form 941X, you need to use the correct address.
Okay, how do you find the right address?
The IRS instructions for Form 941X list the specific mailing addresses. It depends on your state. For businesses in a large group of states, including places like Florida, Georgia, New York, Texas, Illinois, etc., you'll generally send it to the Department of the Treasury, Internal Revenue Service in Cincinnati, OH. For businesses in another group of states, including California, Washington, Arizona, Colorado, etc., and certain U.S. territories, you'll send it to the IRS Center in Ogden, UT. There's also a specific separate address, also in Ogden, UT, that must be used by exempt organizations, federal, state, and local governmental entities, and Indian tribal governmental entities, regardless of where they're physically located.
So check the instructions carefully for your state or entity type. What about using services like FedEx or UPS?
Good point. If you use a private delivery service, PDS, like FedEx, UPS, DHL, remember they generally cannot deliver to P.O. box addresses. The standard IRS addresses for Cincinnati and Ogden might be P.O. boxes. So the IRS provides specific physical street addresses for PDS deliveries for both the Cincinnati and Ogden centers in the Form 941X instructions. You must use those street addresses if using a PDS. If using the regular U.S. Postal Service, USPS, use the standard P.O. box address listed for your location. Always double-check the latest Form 941X instructions for the most current mailing addresses before you send anything, as these can occasionally change. Using the wrong address will definitely cause delays.
Absolutely check the latest instructions for the correct address based on your state and delivery method. Okay, before we wrap this deep dive up, let's just quickly reiterate.
Yeah.
When should you not use Form 941X? What are those specific scenarios where this form is simply the wrong tool for the job?
Right, it's good to end with that boundary. As we touched on way back at the beginning, you should not use Form 941X if your only errors relate just to the number of employees who received wages during the quarter, which is reported on Form 941 line 1. That's just a headcount figure. If it's wrong but doesn't affect taxes, 941X isn't the fix.
Okay.
You also generally shouldn't use Form 941X if the errors are only about the breakdown of your federal tax liabilities reported on Form 941 Part 2, the day-by-day liability breakdown, or on Schedule B, for semi-weekly depositors, provided those changes don't actually affect the total tax amounts calculated and reported in Part 1 of Form 941. Those types of deposit timing or allocation errors often have different correction procedures, or sometimes they might just be noted and corrected prospectively in future filings, depending on the situation.
So 941X is really focused on the core numbers.
Exactly. Form 941X is specifically designed for correcting the amounts of wages, tips, and other compensation reported, or the amounts of the calculated taxes like income tax withheld, administrative errors, Social Security, Medicare, and tax credits that flow from those compensation figures. It's all about adjusting the core financial numbers that actually determine your total tax liability for that quarter. If those core numbers are right, but something else is off, 941X is probably not the form you need. #tax tag outro.
So what does all of this really mean for you, our listener? Well, the whole world of employment taxes, and especially dealing with corrections, can definitely feel like navigating a labyrinth, right? It's full of deadlines, really specific rules, lots of boxes to check.
It really can feel that way.
But as we've hopefully unpacked today, Form 941X, while maybe intimidating at first glance, is actually your crucial tool for getting things right. It's the way to set the record straight with the IRS, and importantly, as we've highlighted, it can be a key tool for optimizing your business's cash flow.
Exactly. Taking the time to understand the nuances of Form 941X, knowing the difference between error types, navigating that adjustment versus claim decision carefully, using the worksheets for credits, and yes, meticulously documenting your corrections in that explanation box, it not only ensures you stay compliant, but it can genuinely lead to significant recovery of taxes you might have overpaid. Or, on the flip side, it helps you avoid those potentially costly penalties and interest charges if you underpaid.
Right. It's proactive financial management in a way.
It really is. It transforms what might seem like a daunting administrative task into what can actually be a manageable and sometimes quite financially astute process. By correcting overpayments, you're not just fixing a past mistake, you are actively engaging in a form of tax savings. You're ensuring that every single dollar your business pays out in employment taxes is precisely what is legally owed and not a penny more.
That's a great way to put it. Recovering overpayments is a form of tax savings. So for employers listening, maybe the takeaway is that staying diligent with your payroll processes and being prepared and knowledgeable enough to use Form 941X correctly when needed isn't just about avoiding trouble with the IRS. It's about actively managing your finances, optimizing that cash flow, and maintaining the financial integrity of your business by recovering funds that might just be sitting there waiting for you at the IRS. So as you think about your own business, maybe consider this. Are there past payroll periods, maybe within that 3-year window, where a closer look, a quick internal audit, could potentially reveal some hidden opportunities for correction, maybe even a refund you didn't even know you were owed?
It's certainly possible. Errors happen.
Yeah. The lesson here, I think, is that even in the complex, sometimes frustrating world of taxes, sometimes acknowledging and fixing a mistake can actually lead to an unexpected financial gain, but only if you know how to fix it the right way, using the right forms, following the rules, and truly understanding the power of that Form 941X do-over button.